What's going on, everybody? It is officially 6:43 in the morning here on Wednesday. I got to get ready. We're going to the office for a little while today to film some stuff. Super sorry about yesterday's video. It was a wreck. I just checked and it has a copyright claim from the voiceover of The Rock during my journal entry. I should have guessed that, but I was so tired yesterday and I just need to get it done. So today I promise to make things just a little bit better for you guys. But I'm going to get in the shower and I'll be speaking to you soon. Some things never change. We're in the car heading to work. One thing I want to bring up really quick and simply apologize for one last time. You can't change the past. We can't focus on yesterday. It's nothing but today and the future. But I'm just sorry for yesterday's video. I was not very happy with the way it turned out. It was quick. I didn't get a lot recorded, and there was a copyright claim on it I saw this morning. So it is what it is. My fault. I promise to make a better video for you guys today anyway, so it begins now. Oh, I thought my phone was gonna fall again. Oh, it's wanting to. It's sliding. So, some exciting news is this morning, after waking up and checking my phone, I noticed from my Gmail account that my stimulus check has officially been deposited through the IRS. Now, a couple things from that. One, it's exciting, and I hope that you who are watching got your stimulus check as well. I can't, when I heard we would get it, I didn't really check it out too much because I wasn't sure if I would qualify or not. And I know that there's a certain bracket to where if you made a certain amount of income, you wouldn't receive it. And I was nowhere near close to the amount. So luckily, I qualified and received it. And I didn't fill out anything. I think they did it through the 2018 taxes. So that was kind of convenient. But with this stimulus check, I just think it's extremely interesting because here not too long ago, when I was volunteering for Andrei Jikh, phone banking, going to events, trying to spread the message of universal basic income, a lot of people would scoff and a lot of people would talk down to me, and some would even criticize me for saying how that's the most ridiculous thing, and Americans need to work and people need to earn their money. And it's true. I agree 100%. And unfortunately, due to this pandemic, it's gotten so bad to where a lot of people, I'm a lucky individual because I still get to go to work and I'm employed, but a lot of people have lost their jobs. A lot of people can't put food on the table, and it's taken this stimulus to help a lot of American people out. And I'm just really curious to see the ramifications of this, because if many Americans are going to be receiving this $1,200, and if they have kids, I believe they get up to an additional $500. Is it really going to work, for one? And two, is it going to be something that the White House will continue to implement as the months continue to pass? You know what I mean? Because the way I look at it is there's going to be a lot of people who are going to spend that money on a bunch of stuff that I don't know if it's necessary or not. And that's why today I want to make this video and show you that out of my $1,200 stimulus check, I'm going to be investing $200 of it into the stock market and saving the other $1,000 for a rainy day fund. And I hope that some of you think of the advice I give later today. I can't do it because I'm going to work, but just using it wisely, because it is a free $1,200, and I don't know how it's going to work come tax season next year and how it's going to pan out, or if we will continue seeing these monthly checks. I don't know. I don't think there's a whole lot of data given on this whole stimulus thing, so I'm excited to see what happens. And here we are. We're back in the room of all rooms, my office den, guest bedroom in my apartment. I was kind enough today to at least set you guys at a different angle compared to, was it Monday's video where you're right here? So, yeah, you're welcome. Giving you a little bit of variety. So, I'm really excited and I'm really amped up for today's video because one, yesterday's video was terrible and I didn't like it and I wanted to do better, and two, today is the day where I get to prove that. I also got my stimulus check today, which is fantastic. Super thankful and blessed about that. So what better way to use some of this stimulus check, $200 of it, keep the $1,000 in my savings for a rainy day fund, and show you guys what really goes on behind the mind of Chris Seibert when it comes to in terms of investing. What's great about YouTube and this platform is I might get really lucky and have a couple people find this video through an impression, whether it be in the related column, in the search history browser, whatever the case may be, or just show up on your YouTube. But as of now, most of my viewers are people who know me because I put either the thumbnail on my Snapchat, I put the link on Twitter, or I also put it on my personal Instagram, my personal YouTube Instagram, The Christopher Seibert. So most of my views come from people that I know, which is totally fine, but it's great because I've been very open about stock trading a lot more recently in the last couple months, more than ever, just because of the prime fact that I feel that investing is so important, especially when you're young, and it's a great habit to get into, so that way as the years go on and you look back and say, man, I should have started investing sooner, at least I kind of, hey, grabbed your attention, or at least I hope so. I mean, that's what I'm trying to do, really make people think, and that's really what this channel is for anyways, you guys know that. But no, going in terms of investing, my whole strategy really recently has been really focusing on dividend stocks. A lot of people, I think, don't know, that aren't really too educated on the stock market or not really sure about it. There's quite a few, and when I mean quite a few, there's a lot of companies out there that will pay you a dividend if you hold that particular stock. This is a great incentive if you're kind of scared of volatility and you don't want to throw your money into a company and the company starts to go down. That's more riskier, and it takes a lot more research and analytical research and looking into the stock and the charts and all that if you're wanting to do that. But if you're a lot more like me, who's passive, doesn't really want to focus too much on the whole stock market, you got your day-to-day going on and you just want the money to sit in there, that's great. But this dividend aspect of it, if the stock goes down, more than likely you're still going to be able to receive a dividend from the company. Now, I will warn you, for one, that this coronavirus, this whole pandemic that we're going through, completely shakes things up tenfold because we've never experienced things like this. I believe, I haven't really done too much research, but at least here more recently. So in terms of dividend funding, I'm going to be buying two different stocks today in this video. I believe one is still handing out dividends, but the other one, as of now, I believe is stopped right now paying their dividend. So yeah, that's just something to think about. But in terms of the whole long-term aspect and holding it long, once we get out of this phase, I'm assuming that the dividend will come back to start getting paid out or handed out again as you hold the company's shares. So just so you know, the key takeaway from what I've just been talking is that some companies in the stock market will give you a dividend. They will pay you a certain amount of money if you hold the share. Okay, so these are two crucial things. And the stimulus check that I'm getting, again, what better way to invest $200 of that and have the money continue to grow? So I'm going to start recording my phone, and I'm going to give you guys just a little background of what I do, what my strategy is in terms of investing. So let's see here. Let me start screen recording, and I'll just be walking you through my game plan in case you're naturally curious. So there's a couple key indicators. For one, I guess we'll just go ahead and open up Robinhood. I'm going to have to edit that out. Okay, so we're here right now currently inside of the Robinhood app. Now, the two companies that I'm going to be buying, I already bought. I already own shares of both of these companies, but I'm going to first at least deposit the funds. So I'm going to go to deposit withdrawals, transfer to Robinhood, and just so you know, I'm going to deposit $200 out of my $1,200 stimulus check. So we're going to go to review, submit, continue, done. Yay! I just got $200 added into my Robinhood account. So the first key indicator, I guess the company that I want to break down and talk about is SPHD. Now, this is a great company and something I'm going to buy because I guess I should just first talk about the company, okay? So SPHD is it tracks a dividend yield weighted index comprising the 50 least volatile names chosen from a short list of the S&P 500's 75 highest dividend-yielding securities. The FINRA listed name of SPHD is Invesco, an SP 500 high dividend, low volatility ETF. The great thing about volatility is the higher the volatility and risk, the more likely your money is going to be sporadic. However, if there's very low volatility, then your money is going to be pretty safe for the majority of the time. The price is not going to be moving. SPHD is monitoring these 75 different companies, so it pretty much goes with the way the market's heading. If the market's having a down day, SPHD will kind of have a down day. If it's having a good day, it'll have a good day. So it kind of just follows the S&P 500. Now, again, we're talking about dividends, and I guess before we really buy and get into more specifics on why I'm choosing SPHD, a resource that's something I would consider, and this is something I've been tracking as well, is dividend.com. Dividend.com, you can search about any publicly traded company and it should tell you if they have a dividend or not. So if I go on to SPHD, or I guess I type it in on dividend.com, you will see that it pops up and you can look at the information and see that the stock dividend data has a 5.82% yield and an annualized payout of $1.89 per month. Now, I said per month, but it's paid monthly, the dividend. $1.89 is the annualized payout. So by the end of the year, the 12-year period, you will have received a total of $1.89 per one share that you own of SPHD, if that makes any sense. Again, you can get a subscription, or not so much a subscription, but you can pay for dividend.com because they have a bunch of bonus features, but they kind of tease you with a couple of little features. Because if you go to dividend history, and this is what I look at, you will see the payout of the history from SPHD. So you can see in March, they paid you 15 cents per share that you owned. In February, they paid you 15 cents per share. It's pretty much averaging the same thing. And you can keep going back and seeing in time, you know, that the dividend has been raised or sometimes even lowered. It's just sporadic, but it's something to follow. Again, I should tell you guys that, if I haven't already, that I'm not a publicly traded, licensed broker or any of that information. I'm really not. This is just a side hobby. This is passive. This is fun. So this is something that I do and just things that I think about. But the main takeaway here is that SPHD does have a dividend that it pays you monthly, but at the end of the year, depending on how many shares you have, then you will make $1.89, which is cool. And that's as of now. This thing could change. I'm not sure if it could change. I'm not really educated on that, but I just want to, keep you in the loop, keep you updated, give you some information. But this isn't the only thing, and this is something I want you guys to consider too. I told you guys that I've been following dividend stocks or looking more closely into those here recently a lot more since I'm a long-term holder, but you shouldn't buy a stock just because it has a good paying dividend. If you look at the chart, this is another research thing that I do. I use Yahoo Finance. If you go to SPHD, and you can see today that they're down $1.36 in the market. However, if you go to Max, look at that chart, okay? Do you see how high it's gone and what the coronavirus has done? If you go to a year, look at this, okay? We'll go to 5 years. See all that green, how high it is? Okay, these are days that I'm passing by. Monday, this is every single Monday of the week. And then once coronavirus slowly hit. So however many shares you buy of this, you're also going to gain as the price continues to go up. So that's another money thing that you're waiting. Obviously the volatility is plays a factor in this certain particular stock, SPHD. But this type of stock, this ETF, exchange traded fund, is just following the S&P 500. The whole S&P 500 is down a lot right now, and it hasn't been like this in years. So again, this is a good stock that I've been watching. I own some already, but in the long term, if you look at the max year, it goes back down all the way to 2012. You can see how the chart has continued to raise, and due to the coronavirus, this stock has plummeted. So those are two things that I look at in terms of dividend stocks. I look at the chart. I also do research on the particular website, And then I go to dividend.com and see some more information about the particular stock and see how much it's paid annually. So we'll get back on Robinhood, and I will buy 4 shares of that. Now that's $126. So we will buy that. Now again, you know, the way you can look at it, I see all the time, people set limit orders, stop orders, all this and that. For the sake of this video, I'm just buying it at this price. It's fine. It's already down a lot. So I now have 49 shares of SPHD. I just bought 4 with an average cost of $30.09. So I still have a below average price as of now that I bought the SPHD shares. But that's stock number 1. The next stock I'm looking at currently and going to buy in this particular video is EPR. Now, EPR is an REIT company. It's a real estate index trust, and the thing about this company is that it operates as a real estate investment trust. The firm engages in the development, finance, and leasing of theaters, entertainment, retail, and family entertainment centers. It operates through the following segments: entertainment and education. The entertainment segment includes investments in a megaplex theaters, entertainment retail centers, family, yada 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 yada. So a lot of takeaways. Now this stock's obviously a lot more riskier. This has got to obviously be a long-term hold, because EPR, with the whole coronavirus and pandemic and businesses shutting down and everything, and especially with most of their leases being to theaters and other real estate locations, entertainment retail, family entertainment centers, it can be a lot more riskier. And this company as well, we will look it up on dividend.com. EPR Properties. They have a dividend yield of 19%, and they have an annualized payout of $4.59 a share. Now again, this isn't, it says paid monthly. That doesn't mean that that much money is paid monthly. This is the annualized total. So they divvy up the price per share per month, and it equals a total of $4.59. So if you scroll down to dividend payout history, no, not that one, sorry. Dividend history. It tells you that in February, they paid 38 cents. In January, they paid 37 cents. So I find it really interesting too. Well, extended date. So, cool. I didn't know that. But anyways, no, regardless, this is a company that's dividend, I'm sure, is purely going to be affected by the whole coronavirus. Again, we'll go over to this. I have it already looked up. If you go to the max chart, look at that. Look how beautiful that is. You'll notice there is a massive dip right here, and this was back in 2008. And if you can remember, that was when the recession hit. Was it the mortgages? When was it? Because that was in 2008. But I think it was the housing market crash. And since then, it's recovered fully. But now looks what happened to the coronavirus situation. If you go to the 1 year, you can see that, boom, it has dropped tremendously from its high. That was 6 months ago. 6 months ago, it was in the 70s a share. Today, it's at $22.44. Now, again, this stock's a little bit more riskier, and it has to be a long-term hold. I've already mentioned before, you know, their real estate and leasing partners are entertainment centers, theaters. You got to think about it in the long run. You got to speculate. Obviously, we're in this pandemic right now, but once theaters open, are people still going to go to the movies? What about other family entertainment locations, as well as what was some more entertainment centers, family retail, entertainment retail. So their dividend's going to be affected, and that's okay. But you shouldn't always just focus specifically on the dividend. That's why you don't want to buy a stock. You want to make sure that you look at the chart. You also want to make sure that you do some more research on the website in general, the company's website, and just make sure that you believe in everything. But I'm going to buy 3 shares of this at $67.35. So I will buy this at the price, and then we will see what I'm at. So now I have 35 shares with an average of $22.36, and it's almost to where I bought in at a while ago. So again, the thing I want to tell you is that, for one, I am not a publicly licensed broker. Please don't, I'm sure if random people come into the video and have a lot of comments or remarks, I can take criticism, I can take the negativity, it's not a big deal. I'm not living in the stock market. I got a lot of other priorities in my life, but I do. It's a side hobby, it's fun, and it's enjoyable. And my big things that I suggest before buying really any company or anything, if you decide to invest in the stock market, is definitely use Yahoo Finance and look at the charts and data. They also post news and other things, and then you can also go to the company's website. And then lastly, if you want to know if they have a dividend or not, you can just go on dividend.com and look at their past dividend payout history, as well as learn more about the company. But overall, I'm very excited about the stimulus check. I'm super thankful and blessed because of that. But I think the big key takeaway from this is that hopefully, there we go, is that hopefully people, who have been in sticky situations with this whole epidemic and, money being tight and are relying strictly on the stimulus, hopefully you can master the art of budgeting better and maybe think more before you purchase something that you really don't need. I know that a lot of people, I'm sure, will be spending money on new TVs, new video game consoles, new shoes, new all kinds of stuff, which is great for the economy. But for me personally, I don't really need any of that kind of stuff. I'm pretty fine with the stuff that I have now. And I would rather use that money and make it grow passively while I just go about my day. But those are my two stocks that I bought with $200 in this whole stimulus check gift deal thing. Why am I like this? I just look back at the footage and I look like a clown. I literally had to completely, I'll have to put a clip over what the original clip looked like to what I made it look like. I mean, it looks so much better because it was way overexposed, but I just need another camera person. I need not even a camera person, just somebody watching behind the back screen, because when I'm by myself doing this, I'll make sure everything's in focus, looks nice, come and sit down, spend 10 to 15 minutes talking about something, go back and then look, and I'm just like, oh, it looks terrible. No negativity though, we need positivity. Goodness gracious, oh man. So yeah, if you're still here, I hope you learned something. I'm such a goofball, I'm gonna get picked on so much in the comments. I literally said real estate index trust. It's an investment trust. I get so tongue-tied. Anyways, we're gonna close the end of the video with the journal that I talked about. Let's see, the journal entry, for those of you that have been following along every single day and watching the videos, we got to go over January 15th, and today is April 15th, the 30-day challenge, so here we go. I needed this run. All day today, I told myself that I was going to run 16 miles for a distance record, which would have put me at 125 out of 75 miles. However, I only ran 10. You'd think I'd be disappointed, right? I ran 10 miles in 92 minutes and 25 seconds. Do you realize that mathematically that's 9 minutes and 14 seconds a mile? Monday's was 9:11 and yesterday's was 9:16. I look back at my running history and the best time I ever got was on October 30th, which was 8 minutes and 30 seconds for only 3 miles. Not only am I more than tripling that distance, but I'm not too far from that time. I may not win the LA trip, but my only true goal was to double 75 miles. I'm only 31 miles away, and there's still 16 days left this month. I just can't fathom what's happening since the first. On another note, around mile 8, I thought I was going to shit myself, and thank God I didn't, because I was in between girls and there was a guy and girl behind me. Talk about ass muscles. Oh my God, I haven't changed a bit. So it was, every time I come out here to record too, that dog is barking on the patio right beside. Oh my gosh. So this is just bad. I have too bad. Seriously, oh my gosh. So, okay, so anyways, long story short, that was more of an entertaining journal entry. Yesterday was supposed to be super hype, and I thought if I incorporated the actual voiceover from the video, it'd be even cooler, but it turns out that they got a copyright strike on that particular part. So,
Yeah, I apologize about yesterday's video. I apologize about the exposure, and I'm about to just go outside and scream in this dog's ear. Oh God. Okay, I'm just wasting time at this point. Guys, I'm so sorry. Thank you so much for watching April 15th video. Again, I hope the stock information helped. I'm not a licensed trader. I'm not a broker. I'm not any of that or mumbo jumbo. I'm just a regular guy who enjoys investing in his free time and studying different companies. And I hope you found that Yahoo Finance, Dividend.com are useful tips. And if you decide to invest, please let me know in the comments. If you are an investor, you don't have to tell me what you're invested in, but companies that you like and all that kind of stuff, because I do enjoy doing that in my spare time, just looking up different companies and looking at the stuff. So thank you so much for watching as always. Thank you for the support. I can't thank you enough, and I will be back again tomorrow for April 16th video as we continue out this 30-day challenge. We are now at the halfway point. So this is an exciting time. But thank you guys, and I will see you tomorrow. Peace.